Greetings, everyone. I trust you are all well. Welcome to my YouTube channel for Kangaroo Maths and Science Academy. Tonight, guys, I want to take you through mathematical literacy, particularly for grade 12 under finance, where I will talk about the income tax calculation. Ladies and gentlemen, without wasting time, I just want us to deep dive into the income tax for grade 12. Don't forget to go through my YouTube channel at Kangaroo Maths and Science Academy and like, subscribe, and hit the bell button for future video notifications. Without wasting time, let's now start with the session. Right, at the end of the session, learners should be able to understand the term income tax and must also be able to know how to calculate income tax and also be able to know the government institution which is responsible for the collection of tax returns in South Africa. And also you must familiarize yourself with terms like tax rebates and tax thresholds. Right. Number one, without wasting time, let's talk about the term income tax, which on this context, I'll call it the personal income tax. Right. In terms of the definition, the term income tax, let me just use this. So I'll talk about number one. I'll define what is an income tax. Right. In terms of the maths literacy, income tax is a tax imposed on individuals or businesses, which you call it the entities or the businesses, by the government based on their income tax, or based on based on their taxable income. I apologize. So this is called an income tax. So an income tax, it is the tax that is imposed on individuals or businesses based on by the government based on their taxable income. So this is called an income tax. Actually, these income tax, we generally call it a personal income tax because it is just the tax that is being charged that is being charged by the government based, if it's on individual, it means it will be based on the person's income, the annual income, or actually, yes, but in terms of the business, it will be based on their profit actually. So this is actually called an income tax. And under this income tax, one must be able to know the government institutions that are actually responsible for collection of this income tax. The institution which is responsible for the collection of the income tax in South Africa is SARS, which is the South African Revenue Services. So this is the government institution which is responsible for the collection of tax returns. Remember, this income tax has to do with what you call the payee. which stand for the pay as you earn. Pay as you earn. Now, the question is, how do we actually calculate this income tax for individuals or for businesses? Before we actually be able to know how to calculate the income tax, let's talk about the term tax rebates, and tax threshold. Okay, let me first explain what do you mean by a tax threshold, then we're going to move on to tax rebates. Right. How does these individuals or business actually taxed by the South African Revenue Services, which is SARS? Actually, if one is like, let's say a person is working and is earning a salary or an annual income. Now, not all the people who are working are responsible for paying tax. Some are not eligible to pay tax and some are eligible to pay tax. Which means in terms of the government or SARS, they actually come up with what we call an income level, which it's used to check whether a person qualifies to pay tax or not. And this income level is actually called a tax threshold. So a tax threshold is the income level. It is the income level at which a person begins paying income tax. So it is an income level at which a person begins paying income tax. So what does this mean? It means that if the taxable income of a person is bigger than or is equals to the tax threshold, then that person is eligible to pay tax. But if the income or the annual income of an individual, it's less than the tax threshold, then that person is not obliged, is not eligible to pay tax. So this is called a tax threshold. So it's an income level at which a person begins paying income, which is set by the government institution, actually the South African Revenue Services, which is SARS. Right. Which means that one must be able to know what is a tax threshold and what is a tax rebate. Right. What is a tax rebate? A tax rebate is an amount by which SARS, which is South African Revenue Services, reduce the actual tax, based taxes owing based on the age of a person. Based on the age of an individual or of a person. So this is actually referred as tax rebate. Let me explain it. A tax rebate is an amount by which SARS reduce the actual taxes owing based on the age of a person. Actually, it has three categories, which we're going to talk about. It's called a primary rebate. We have a primary rebate, secondary rebate, which is actually based on the age range, and tertiary rebates. Where under primary, usually all individuals who are working actually, all individuals who are eligible to pay tax, they actually qualify for a primary rebate. So one must be able to understand what is a tax rebate and what is a tax threshold, as I said. And then let's deep dive into how do we actually calculate the income tax. Right, income tax is actually based on what you call the tax bracket, which is actually set by the South African Revenue Services. And this tax bracket actually changes every year. So now one must be able to understand or be able to use the tax brackets in order to calculate the income tax of individuals or businesses or entities. Now, I want us to take this further to actually go deeper to say, how can one calculate an income tax, whether for an annual or for a monthly basis? Now, let's now continue. Okay, right. Then now, in terms of these definitions, as I said, you need to be able to define what is an income tax and also be able to know which government institution is responsible for the collection of these tax returns in South Africa from the individuals or from the businesses. Actually, most of the businesses, they actually calculate their income tax based on their profits. So now, again, you need to also be able to familiarize yourself with what you call tax rebates and tax threshold, as I said now. Now, let us now continue and talk about how can one be able to calculate an income tax. Right. Without wasting time, let's now start with the steps of calculating an income tax. Okay. First of all, we need to actually be able to talk about what you call the non-taxable income. Okay. Here it's one of the example of a tax table which we'll be talking about, which is actually set by the South African Revenue Services. If you look at this tax table, it is actually said as on the first table. This one is for the year of 2018, from the 1st of March 2017 to the 28th of February 2018, based on their financial year. If you look at this tax table here, this tax table has actually have what you call tax income based on the range and also the rates of the tax. Secondly, on the second table, it's what you call the tax rebates, which we'll be talking about. So this is the tax rebates and the tax threshold, which we'll be talking about this, as I said. Now, these tax table are actually calculated. It's for a year or for an annual. It's an annual tax table. So it means when you are doing the calculation, your calculation should be for an annual basis, not monthly. Right. Let us now return to what I would like from the previous page, so that we can explain on how to actually calculate an income tax for an annual or for a monthly. Number one, we have what we call a taxable income. What is this taxable income? A taxable income is an income where we have taken the gross profit and we subtract, or the gross income, we subtract what is called the non-taxable items, or the non-taxable income. So there is an income which is actually not taxable, or it should be taken out before we calculate an income tax, which you call it a non-taxable income. Now, let's talk about this. When we calculate an income tax based on the tax table, the one that I explained earlier, we need to always consider the following. We must first have what you call an annual income tax, or annual, let me just say annual taxable income. So first we need to have an annual taxable income. So from the annual taxable income, first of all, we take the gross income of a person, of an individual. We subtract what we call the non-taxable income. The non-taxable income. Whether sometimes you find that it's for a year, or it can be for the monthly. Now, when we talk about the non-taxable income, actually, let me use this, because I don't want to erase this anymore, because I know if, okay, let me just use the word tool, so that I don't keep on erasing time and again. Okay, right, let me go through this. Right, as I said, okay, let me just take a color, change this to blue. Okay, so as I said, if we take, like if we wanted to calculate the annual taxable income, we have to always take the gross income then we subtract the non-taxable income. Now, what are these non-taxable income, or what are examples of non-taxable incomes? The non-taxable income, we have items like, number one, a pension fund. Pension fund is an example of a non-taxable income. So it means when we are calculating tax, we need to subtract this before we start doing the calculations. Secondly, things like donations. Donations are examples of a non-taxable income. And also in other examples, we have UIF, which is the Unemployment Insurance Fund. The Unemployment Insurance Fund. These are examples of non-taxable income. So when we want to calculate the taxable income, whether it's for monthly or whether it's for annually, we always take the gross income. Depends whether it's for monthly or annually. We subtract the non-taxable income. So it's very important to first identify the non-taxable items. Then we have to subtract them before we calculate the income tax. Then now, once we have the annual taxable income, then now number two, we need to also check whether the person with the annual taxable income, whether this person qualifies to pay tax or not. And to check that, it means we need to be able to check using what you call the tax threshold. The tax threshold, it's, as I said, is an income level which is set by the South African Revenue Service, particularly in South Africa, which gauge whether a person qualifies to pay tax or not. Which means that if the annual taxable income is greater than the tax threshold, it can be greater or actually equals to, but if his tax is greater than the tax threshold, then this person qualify to pay tax, has to pay tax. But if the annual taxable income, it's actually below the tax threshold or less than the tax threshold, then this person do not qualify or does not qualify to pay tax. Now, if the person qualifies to pay tax, then we need to identify the tax bracket. We need to identify the tax bracket in which the person falls. And remember, identification of the tax brackets depend on the annual taxable income, not on the monthly. Why? Because the tax table is set by the South African Revenue Service to be on an annual, it's set on the annual base. So it means it's an annual tax table, not monthly. So we must first identify the brackets in which the person falls. Then after identifying the tax brackets, now we can calculate an annual tax based on the bracket identified. Then after doing that, we need to also take into account the tax rebates. We need to calculate the tax rebates of this individual based on the age, based on age of that person, based on the age of the person. Remember, the tax rebate is also set as an annual amount. Then this tax rebate need to be reduced from the annual tax. So what does this mean? It means we take the annual tax, we take that annual tax income, we less the rebates, we subtract the rebates, which we are going to talk about. And after taking these annual tax income and subtracting the rebates, we have to take this annual income tax, which we have subtracted the rebates, we divide these by 12. Why dividing by 12? Dividing by 12 actually will give us what you call a monthly tax income, or yes, the monthly tax. And within this monthly tax, we need to take the monthly tax and subtract what you call the medical tax credits. Usually, this one are actually usually them on monthly basis. And this medical tax credit actually depends on the person as the main member and also other dependents. And this is very important, ladies and gentlemen. Let me go back and explain this step by step. Number one, when you are calculating an income tax, first of all, you need to check whether the person qualifies to pay tax or not. Then to do that, it means now you need to look at what you call the tax threshold. But don't forget, if you want to calculate an income tax, it means you must first have what you call an annual taxable income. And this annual taxable income, it means you have to take an annual gross income, then you minus the non-taxable income, if they are actually annually. But if they are not annual, it means you have to calculate the monthly taxable income by taking the monthly gross income, you subtract the monthly non-taxable income. Then the non-taxable income, actually, examples, as I said, is things like pension fund, donations, and the UIF. Actually, UIF usually contribute to 1%. And pension fund, usually they're around 7.5%, but depends. They change usually. But usually it's around 7.5% in South Africa. Then even the issue of donation, this need to be subtracted before we calculate the tax. Then thirdly, remember I said the issue of tax threshold is just an income level which can tell us whether the person qualifies to pay tax or not based on his or her taxable income. And also the issue of identifying the tax bracket to which the person falls to check whether this person qualifies to pay tax or not. And also take into account the issue of the rebates. This needs to be subtracted from the annual tax income. So we calculate the annual tax, and after calculating the annual tax, we subtract the rebates. And after subtracting the rebates, then we have to divide that tax, because it's for an annual, we divide it by 12 to get the monthly tax. And after getting the monthly tax, that's when we can subtract the medical tax credit. Unless if this medical tax credit were on the annual, were were calculated annually. And this is very important, ladies and gentlemen, especially the part of the non-taxable items or income. Now, let's now deep dive into the examples. I want us to go through the examples. Then we'll also come to this and explain it one by one. And guys, you must check whether the amount provided is annually or monthly. So it's very important to consider that. Right, let us now go through the example together, ladies and gentlemen. Let me change the color. Okay. Right. Now it says the table below shows how the pay-as-you-earn payee tax rate and rebate information for 2018. As I said, every year the SARS has to change the tax table as set out by SARS. 2018 tax year from March 2017 to the 28th of February 2018. Then these are the rebates, taxable income, I'm to say. This is level 1, level 2, level 3, level 4, 5, 6, and 7. So if you can check this, those taxable, remember this is an annual. So any person who's earning between 0 to 189,880 is eligible to pay tax of 18% of is just 18% of the taxable income. But the one that is earning between 189,881 to 296,540 has to pay 34,000 as the minimum, 178 plus 26% of the taxable income that is above this. So we'll talk about this. Right. Then let's now move on to the issue of the rebates. Remember, what did I say? I said rebates is an amount at which SARS reduces the actual tax owing based on the age of a person. And it's actually calculated yearly. So if you check at this is being compared from 2014, 15, 14, 15, 16, 17, 18. So you see that the amount's actually changing. But now, since we are talking about the 2018, now we're going to focus on the 2018 column. So what is this primary? We have primary, secondary, and tertiary. You can see that under secondary, it says, this is for those people who are aged 65 and older. Older means to a maximum of 74 years, because tertiary takes those people who are aged 75 and above. Obvious, if a person it's aged 70, let's say 76, yes, it's age is age 76 years. It means this person qualifies primary, secondary, and tertiary. Primary means qualifies for all the rebates. But for a primary, it means this is for people who are aged, the age it's less than 64. So it's less than or equals to 64 years. Why? Because secondary, it's for those that are 65 and older, based on this. Then we also have the tax threshold or the income level. So this tells us that any person who's under 65, based on this, the tax threshold qualifies to pay tax if he's earning more than 75,750, based on the age of the person. But this is on an annual basis. So you need to be able to understand this. Right, let's now go through the examples together and try to answer the questions. So remember, the tax tables changes based like yearly, in a yearly basis. Right. If you look at this one, it says calculate the monthly tax owed. Monthly tax owed. So we want to calculate the monthly tax. So let me come this side because I wanted to. Okay. So it means we want to calculate the monthly tax owed based on a 40-year-old taxable salary of 43,000 per month in 2018. Right. We know that when we are calculating a tax, we must have an annual taxable income, because the table are set based on years, not months. So number one, according to what I said we need to first calculate, we must first identify, we calculate the annual taxable income, not monthly. If you look at this, we do not have, we are just given a monthly taxable income. And within this monthly taxable income, there are no deductions, because they did not say anything about pension. They did not say anything about donations. They did not say anything about the UIF. So we assume that there is no non-taxable income. All right. First of all, we're going to say, since we are given a what? A monthly taxable income. Here we are given a monthly taxable income. So we're going to say the monthly, okay, let's do this. Let's do this. Okay, let me erase this. So I will say, number one, we have to come up with an annual taxable income. The annual taxable income, it means we take this monthly taxable income, because this it's for a month, so it will be 43,000 multiplied by 12. 43,000 multiplied by 12, 43,000 multiplied by 12. This will give us 516,000, if I'm not mistaken. There are no non-taxable items, no pension, no, so it means we do not subtract anything here. Now, what we're going to do, we're going to simplify. Since the annual taxable income of this 40-year-old person, it's 516,000. We need to first check whether the person qualifies to pay tax or not. Obvious, to do that, it means you're going to look at the tax bracket. I'm saying the tax threshold for the year 2018. This person is aged 40, so it means he's still under 65. And what is the tax threshold? It's 75,750. You can see that this annual taxable income is bigger than 75,750, which means this person qualifies to pay tax. And since the person qualifies to pay tax, we must first identify the tax bracket of this person in the bracket in which this person falls. And what is the tax bracket? The person is earning 515,000. 515,000, when we check from our bracket, this person is falling in bracket number. Okay, let me check. Okay, it's 43 years. It's falling in bracket number. We have 1, 2, 3, 4. Is in bracket 4. And since he's falling in bracket 4, because his amount is between 410,000, 461 to 555,600, means this is what he qualifies to pay as tax. So we're going to write this as an annual tax, annual income tax. So what is an annual income tax? First, it means as the minimum, he qualifies to pay 97,225 plus, what do we have there? 36%, 36%, which is 36 over 100 of his taxable income. What is his taxable income? His taxable income above this. So it means you have to take the annual taxable income, which is 516. The question is, this 516 is above this amount here by how much? So it means you're going to say 516,000 minus 410,460. So it means we're going to say we'll have the 97,225 plus 0.36 of the difference. What is the difference? 516,000 minus the 410,460. So this will give us an amount of 105,540. So we can work out this to get an annual taxable income. So it will be 97,225 plus 0.36 of the, oh, okay, I apologize there. Okay, let me just work out this. 410, 460, 410, 460. So it means the taxable income will be 135. Okay, so it means I have to write it somewhere here. Okay, let me just Okay. Okay, let me say 516,000 minus 410, 460. This will be 105. Okay. 105, 540. This will be 410, 410, 460. So obvious, this will give us an amount of, okay, times 0.36 plus 97225. So this will give us an amount of 135219.40. But look, this one, it is an annual tax. But still, we are not done because the question wants the monthly tax, not an annual tax. Okay, I wanted to work out this here. Right, the annual tax now would be, remember I said we have to calculate this annual tax should be reduced based on the rebates. So we have 352, oh, 13. So it should be 13. I apologize. 135219.40 less the rebates. We need to subtract the rebates. Now, let us now look at the age of this person. This person is aged 40. So it means he or she falls under the primary rebate. So it means we're only going to subtract the primary rebates. So what is the primary rebate here? The primary rebate, it's 13,000. It qualifies for a primary rebate. So it's 13,635 rand. So what will be the amount here when we subtract the rebates? So it's 135,219.40 minus 13,635. So this will give us an amount of 121,584 rands and 40 cents. But now we want the monthly tax. To calculate the monthly tax, we take an annual tax. We take these annual tax because this one's for a year. We divide by 12. So this will be 121,584 rands and 40 cents. Divide this by 12. So we divide that by 12, and this will give us a monthly tax of 101 or 10,000, I'm to say 132 rand and 3 cents. So it's 10,131 rand and 3 cents. But if this person was having any medical aid scheme, so we're going to subtract the medical aid here based on the dependents. So you see that first of all, we're given a monthly taxable income. We have to multiply that by 12 in order to get an annual. Then we check whether the person qualifies to pay tax or not. Then we identify his or her tax brackets. Then we calculate based on the minimum amount that he qualifies to pay, plus the percentage indicated on the tax table, based on the taxable income, which is above what is indicated on the tax table. So we get the difference. Then we calculate the annual tax. After calculating the annual tax, we less the rebates based on the person's age. Then we divide by 12 to get the monthly tax. And we subtract any medical aid benefits. Then from there, we calculate, we'll be having the monthly tax. So this is what we were calculating on number 1. Right, let me now move on to the second question. I believe you are following. In the second question, it says, if a taxpayer is over 75 years, what is the total tax rebates amount that she will receive in 2013? So here we wanted to know the total tax rebates this person will receive. Obvious, a person who's over 75 years, so it means now he's under tertiary. And person who's under tertiary, it means qualifies primary, secondary, and tertiary. So we need to add these amounts. So it will be 13,635 plus 7,479 plus the 2,493. So all in all, this will give us a total of, so 13,635 plus 7,479 plus 2,493. So this will give us 23,607. You can just say 0.00. So it means it's 23,607 rand. So that is because if it's over 25, already it's under primary. So automatically qualifies for primary, secondary, and tertiary. I believe you guys are following. Now, let's move on to the next question. Hetty is 67 years old, who works in her daughter's flower shop. She earns 8,700 a month, not annually. Will she pay tax? Explain your answer. First of all, we need to come up with the annual taxable income. So the annual income now will be 8,700 multiplied by 12. And what is the amount there? 8,700 multiplied by 12. This will give us 104,400 rands. This is an annual income tax. Now let's go and check, or let's go and compare his annual income tax and the tax threshold based on its. Remember, he's 67 years old. Obviously, 67 years old, it's between 65 and older. It's here. No, yes, we look at the tax threshold. Okay. Based on the tax threshold, it's here. What is the minimum? What is the tax threshold? It's 117,300 rand. You can easily see that his annual income tax, his annual income tax, its income, or the taxable income, it's less than the tax threshold, is below the tax threshold. because it yet shows that if the tax threshold is 117, any person who's above this as an income tax, which is above, then he qualifies. Already this one do not qualify because his annual income tax is less than the tax threshold. So it do not qualify. Does not qualify to pay tax. So this person does not qualify to pay tax. So does not qualify to pay tax. Or we can say do not qualify to pay tax. This person does not qualify to pay tax. She does not qualify to pay tax. She does not qualify to pay tax. I believe you're following. All right, let's now move on to the next question. Show how the under 65, show how the under 65 tax threshold for 2018 was calculated to be 75,750. Explain what this means. So according to this, we need to show how the under 65 tax threshold, the under 65 tax threshold was actually calculated. Yeah. This one of 75,750. Okay. First of all, we need to check what was the tax threshold for 2017? 75,000. Now, the 75,000 now has increased to 75,750. So we want to know how we arrived or how they arrived at 75,000. I believe you're following. Okay. 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 Let me check something here. Okay. Now, let's first go through this, then we'll come back to this one. Number 5. If a taxpayer is 68 years old, if a taxpayer is 68 years old and earns a total of 87,000 in this tax year, is below the tax threshold. He is below the tax threshold and will not pay tax. Show why this is the case using calculation. We want to actually show why a person who's earning 87,400 in this tax year, and his age, he will not be able to pay tax. Look, if this person is aged 68 and is earning an annual taxable income of 87,000, let's go and look at the okay, let's read the question again. Okay, and enter total of 87,000. Obvious, when you are going to check this, he's falling in the first bracket between 0 and 180 something. Then, which means you have to calculate 18% of the taxable income. So now it means the annual tax will be 18 out of 100 multiplied by 87,400. What is the amount? 18% of 87,400. This will be 15,732 rands. But remember, we need to subtract the rebates. We need to less the rebates. But look at this. Looking at his age, he's age 68. And someone who's age 68 in terms of the rebate, it means is falling at the secondary. So it means he qualifies for a primary and secondary. And what is the primary there? It's 13,635. So it means we have to subtract that. 13,635 plus the 7,000 was 7,479. 7,479. These are the rebates. Let's now take 15,000. We subtract this. 15,732 minus into 13,635 plus 7,479. You see that the amount is negative, which shows that this person does not qualify to pay any tax. The person does not qualify to pay any tax. I believe you're following. I believe you're following, ladies and gentlemen. All right, let's now move on to the next question before, like, we'll end up with question 4. All right, then now with question 6, it says, Savannah, who's aged 26 years, earns 28,300 gross pay per month, gross pay per month. Her employer deduct 1% for this of this gross pay for UIF, and there is also 1,650 per month towards pension. And what they said, pension, UIF, these are non-taxable items. So we need to deduct them from the gross salary, from a gross salary. Now, the first question says, calculate her taxable income. Okay. Here they did not actually mention whether it's an annually or monthly. So, but we just assume that taxable income will be the the monthly one. Okay, let's call this number A. First of all, we have to calculate the deductions there. To calculate the deduction, first we need to calculate the UIF because we're given the 1%. So let's now calculate the UIF. Now, to calculate the UIF here, we'll say the UIF will be the 1% of this person's gross salary per month. So it will be 28,300. So what is the 1% of 28,000? So 1 out of 100 times 28,300, because this one is a monthly salary. So you will contribute 283. And we also have pension fund, which amounted to how much? 1,560. So it means this will be remember this per month, this will be the monthly non-taxable income. So we have to add these two amounts. Right. What will be the monthly non-taxable income of the two amounts? Obvious, it will be the 283 plus 560. This will be 1,843 rand. So it means now we're going to say the monthly taxable income would be the monthly gross salary minus the deductions, the monthly non-taxable income. Okay, what is the gross? Is 28,300 minus 1,843. So this will be, so it's 28,300 minus 1,843. It means this will amount to 26,457 rand. But now they said calculate a taxable income. So actually, we don't know whether it's monthly or annually, but let's just leave it here. This will be the monthly taxable income. Unless if they wanted an annual one, we're going to say annual taxable income will be the 26,457 rand times 12. So this one will give us an annual. So it's 26 times 12, which will be 317,484.00. So we've answered the first question. Second question says, now calculate her tax per month. Tax per month. So we want her monthly tax. Obviously, calculate the monthly tax. Already we have the annual taxable income. Let's now identify the branch. I'm saying that the tax threshold. Let's check whether the person qualifies to pay tax or not. Okay. Okay. What is the tax? Oh, is the age? I think, oh, is they said 26, right? It's okay, 26 years old. So it means he's still under 65. You see that his income is bigger than 75,000, so he qualifies. So let's identify the bracket. The bracket, it's 300 something, so it's between 29,000. So this is the information between, yes, so it's 61,910 plus 31% of this. So let's write this down. Okay, I can write it here. So we can say annual tax would be 60. Okay, let me just go and copy this. Okay, 61, because it's in this tax bracket, this one. There is something, it's just between like this one. So let me just try to copy this. Okay, on this amount here. Right. Then now I can discard this one. Right, let's come down. Okay, let me just paste it here. What happened there? Okay. Okay. Okay, 61,000 is in this brackets. Okay, here's the amount. Okay, let me copy. Just minimize for now. Okay, so I'll paste here. Okay, let me look for it. Okay, let me just try to open it here. I'll write it here. It says 61, 61, 910. 910 plus 31, which is 0.31 of the amount that is bigger than, what is that amount there? 61910, that is bigger than 296,540. 296,540. Let's confirm. So it's 61,910 plus 31% of the taxable income bigger above this 296,540. Okay, fine. We can close this. What is this annual tax? Annual tax is how much here? 31. Okay, we have it here. It's 31. So we take 31,7,484. We subtract this. So that would be 61,910 plus 31% of 317,484 minus 296,540. So this will give us an annual tax of 68402, if I'm not mistaken, 0.64. But this person is aged, what is his age? He's aged 26. So obviously, a person who's aged 26, yes, it means qualifies for a primary rebate only. So what is the primary rebate? 13,635. So we only subtract the 13,635 because qualifies for primary only. So it's 13,000. Okay, sorry guys. 13,635. So what will be the annual tax? Annual tax will be minus 13,635. So the annual tax will be 54,767 rand and 64 cents. But now we want tax per month. So it means we want the monthly tax. And I'll do that. We take an annual tax, which is 54,767 rand and 64 cents. We divide this by 12. So divide that by 12. This will give us an amount of 4,563 rand and 97 cents. So that is the amount. That is an amount. Okay. Right. I believe you are following. I believe you are following. Okay. Right. Now, without wasting time, oh, by the way, we're supposed to look at this question. Where is it? Okay. Or we've answered that. Oh, we're supposed to look at number 4. It's fine. We can go through that, but before we look at it, let's just finish this one, then we will come to that one. Okay, here we have an example. It says an employee contribute tax monthly through SARS. Chloe is a 51 years old educator who earns 34,447.22 monthly and contributes 7.5% of her gross salary towards pension. I think we spoke about this. Pension fund. She also has a medical aid for herself, husband, and 2 children. Okay? The tax table below is used to calculate the amount each person will contribute according to his or her salary. So this is our tax table, and also we have the information there. Then the first one says, write down the acronym SARS in full. Okay, we know we can answer that. This South African Revenue Services, fine. Write down the number of tax bracket in which the personal income tax table, the tax income table above. The number of tax bracket in the income tax table above. The number of, we just want to write down the number of the tax brackets in the income. Here they wanted to see whether you are able to know the tax brackets. How many are they? It's 1, 2, 3, 4, 5, 6, 7. So the answer is 7. Straightforward. Write down the number of the tax brackets in the personal income tax. So they're just 7. Straightforward. Okay, fine. Then now the second one says, show by means of calculation how the minimum amount of 77,362 charged from one of the tax brackets. Remember, from this, we know that in terms of this, it means the minimum amount is 42,000 plus 26%. Then this, so they wanted to know how much this, how did they arrive at 77,362? Obvious, they arrived at this based on the previous information. So to confirm that the 77,362 is the minimum of the test bracket number 3, we need to do this. Okay, I'll just take this as 2 point. Okay, let's say this is 2.3. We want to confirm the minimum amount which was charged in brackets 3 based on the previous bracket. So it means to do that, we're going to take the previous, what was the minimum amount in bracket 2, because we want to confirm this. In brackets 2, it's only, so I'll just say 42,678. 678 plus, what was the percentage by then? 26%, which is 0.26 of the taxable income, which is above this. Obvious, you see that we are talking about this range between. So what is the maximum here? The maximum, we take the maximum, which will be 370,500. So the 370,500 will less the one which was indicated there, which is 237,110. 237,000. So 237,100. Okay. So we're gonna get 42,678 plus the 26% of the difference. So 0.26 into 370,500 minus 237,100. This will give us 34684. Then we add the two amount plus 42,678. This will give us an amount of 77,362. That's why they've used this as the minimum. So which means that if you wanted to confirm, for example, how the 121,000 came as the minimum, we use the previous bracket. So it's going to be 77,362 plus 31% of 519 minus the one provided there. Still to give us the same answer. I'm saying it will give us 121. You can confirm that on your own. So we have answered this question here. Right. 2.2.4, it says, give the meaning of the term tax rebate. I think we explained that. Tax rebate, it is the amount it is an amount by which SARS reduce the actual taxes. I'm saying the actual taxes owing based on the age of a person. Okay, so I believe you can be able to answer that. So now, what is the next question? The next question says, Chloe said that her monthly tax contribution is 3,550 rand 25 cents. Her monthly tax contribution is amounted to 3,550 rand and 25 cents. Showing all calculation whether her statement is correct or not. We want to show whether her statement is correct or not. So let's do that. First of all, we need to take her, okay, this is 2.2.4. We are given we have to first determine the pension fund. Because we are given the monthly gross income. So what is a monthly pension fund? Because this is a monthly gross income. So it's 34,447 rand 22 cents. So 3,447.22. So we're gonna calculate 7.5%. So it's 7.5 out of 100 of the monthly gross, which is 3,447.22. So what is the amount? 7.5 over 100 multiplied by 3,447.22. This will be 2,800 and, or 2,000, sorry, 2,583 rand. So it's 2,583 rand and 54 cents. And this is a non-taxable item. Do we have UIF? It's not there. There are no donations. So what we're going to do, we're going to say we want to calculate, let's first calculate the monthly taxable income, because this is actually given on a monthly basis. So when we're going to take monthly gross income, let me just call it monthly gross, then we minus the non-taxable items or income, but this one will be for a monthly. So I can just say monthly non-taxable. Okay, what is the gross? The gross is 3447.22 minus 2,580 rand and 54 cents. So what will be the monthly? So it's 3447.22 minus 2,580 rand 54 cents. So this will give us an amount of 31863.68. So now from here we have to calculate the annual taxable income. And what will be the annual taxable income? 3,100 and 318,006 31,863 rand, 863 rand. Okay. So it will be 31,863 rand and 68 cent multiplied by 12. Remember the non-taxable income is just pension. There's no UIF times 12. So this will give us 382,364.16. Then now we have to identify the tax bracket. Tax bracket here, based on the annual taxable income. It is bracket 2 is between 237,101 to 270. No, it's bracket 4. I mean to say, sorry, I apologize. It's 4. So it means it will be 77,362 plus 31% of the taxable income that is above 370,500. So it means we take the minimum amount which we have calculated here. So I'll say annual taxable annual tax. Let me just say annual tax, not annual taxable income. So the annual tax would be, from the table, it's 77,362 plus, what is the percentage, by the way? 20, was it 26? Or percentage is 31. Okay. 31%. What is that? 31% of the taxable income above. So it will be, what is 31%? 0.31. And we take that the annual taxable income is 364.16 minus the 370,500, if I'm not mistaken. Let's go and confirm. Yes, it's this one. So it's okay, that 1%, because the amount is falling between this interval. Okay, it's fine. So it's 370,500. So let's do the working. So the annual tax would be 77,362 plus 0.31% of 364.16 minus 370, 500. So this will give us an annual tax of 81,039 rand and 89 cents. 81,039 rand 89 cents. So here we want the monthly tax. Obviously, the monthly tax, we have to take this amount, 81039, 39, sorry, 0.89, divide this by 12. So this will be how much divided by, so it's 81,039 and 89 divided by 12. This will give us an amount of 6,753 rand and 32 cents. But yeah, this time around we have to subtract the medical tax credit. And according to this, they said this person has a medical aid for herself, for herself, for herself, for herself, the husband, and 2 children. You see, medical aid tax credit per month, not per month. This for per month. So what is it? It means that there are 5 in number. It's hers, husband, and 2 children. So this must be times 2. So it means it's 234, because for 2 children times 2, which is 468 plus 347 for the husband, and also 347 for the taxpayer. So this is 1,162. I apologize. So we need to subtract the 1,162, which is the medical tax credits. So it will be 6,753 rand and 53 rand and 32 cents minus 1,162. So this actually, that's why. No, something's wrong. We forgot to subtract the rebates. I can see something's wrong. We do not subtract the rebates, ladies and gentlemen. Let's correct it. The rebates from the, so it means this will be wrong here. We have to subtract the rebates. Let's subtract the rebates. This person, it's aged 51. Obviously, a person whose age is 51 years qualifies for a primary rebate because he is 51 years old. So qualifies for a primary rebate, which is 16,425. 16,425. So we need to subtract that from the annual tax before dividing by 12. So it's 16,425 for primary. Okay. I believe you are following. Let's confirm. Let's check that. $16,412. $16,425. It's okay. So 16,425. This is primary, okay? Let's go and subtract the amount. Yes, 16,425. So it's 81,039 and 89 minus 16,425. So this will give us an amount of 64,614 rand 89 cent. So we divide that by 12. So this will give us an amount of 5,384 rand and 57 cent. So 5,384 rand and 57 minus 1,162. So this will amount to 4,225.57. So it means, according to a calculation, calculations are incorrect. Verify showing all calculation whether a statement is correct or not. A statement is incorrect. So incorrect statement. Incorrect statement. The monthly tax is 4,225 rand and 57 cent. Okay. So you need to know that all the time you calculate, when calculating the annual tax, you less the rebates. After lessing the rebates, then you divide the total by 12. Then you subtract the medical tax credits. We initially we forgot to reduce like the tax amount by the rebates. Okay, so now I believe you are following. Then the last example here, Dean is 25 years old. Dean is 25 years old, male, and earns a taxable income of 305,174 rand and 44 cents. You see, this amount already, it's an annual, this is an annual taxable income. So we're given annual taxable income. He started his first job on the 1st of March 2019. 2019. Okay, then the income tax rebates, according to this, it says tax payable by individual for tax year from 1st March to 29 February 2020. It's indicated in the taxable in the table 1 below. Right, this table actually moves from 1 to 7. There's 7 brackets, but now note here, they said Dean is not a member of the medical aid. It means that he does not have any medical tax credits. It's not a member, so it means we're not going to subtract any medical tax credits. Right. The first question says, use table 1 to answer the questions that follows. Name the government institution responsible for collecting tax return. Already this is SARS. SARS, South African Revenue Service. Okay. Write down the tax brackets that will be used to calculate Dean's tax payable. Obviously, since you were given an annual taxable income is of 305,174 rand 44. So we're going to look at his tax brackets. Obviously, this is between, it's actually it's bracket 2. because the amount falls between 195,851 to 305,850. So you see that it's within that. So which means is in bracket 2. So it means it's a tax bracket 2. So it means it's a tax bracket 2. Calculate the monthly tax payable by Dean before any rebates deducted. Before, here they wanted only the monthly tax payable before we reduce the rebates. So it means they just want us to calculate the monthly tax before any rebates are subtracted. So what do you do first? We identify the tax brackets. And after identify the tax brackets, now we can calculate the annual tax. So how are we going to calculate the annual tax? First of all, okay, let's do this. Because already we're given an annual taxable income here, so we can just say, okay, right, where we know the tax brackets in which this person falls. So it means you're going to say, we calculate the annual tax first. Annual tax will be, we said it's in brackets too, right? 305 once, yes. So we take 35,253 rand plus the 26%, which is 0.26 of his taxable income. What is his taxable income? 305,174.44, which is above. Above, it means subtract what? 195,850. So let's get the difference. Okay, apology. Then now, let's do the calculations. So we're going to calculate, we're going to get the annual tax here. So the annual tax will be 35253 plus 0.26% of 305,174.44 minus the 195,850. So this will give us 63677.35. But according to the calculation, we need to less the rebates, but did not provide any because they said calculate, what is the question? Calculate the monthly tax payable by Dean before any rebates are deducted. That means it means here we do not have to deduct any rebates. So what would be the monthly tax? The monthly tax would just be 63,677 rand and 35 cents divided by 12. So I have to divide that by 12. 63677.35 divided by 12. It means it will be 5,306 rand and 45 cents. Okay, so this is the answer. Now the next question says table 2 below indicate the rebates for 2018, 2019, and 2019, 2020. So we're here now. Then the question says identify the tax rebates that Dean qualifies for 2019, 2020 tax rebates. First of all, we need to check Dean's age. He's 25, he's a 25-year-old male. 25-year-old male is below 65, so it means falls under primary. So he qualifies for 14,067 rand only. State the number of the tax rebates. State the number of the tax rebates a 75-year-old man will qualify for in any, state the number, not the amount, we are stating the number. So a person whose age is 75, so it means already you see 75 and above, he qualifies for primary, secondary, and tertiary. So it says state the number of the tax rebates of 75-year-old men will qualify for in any tax. So qualifies for 3 rebates, 3 of them qualifies for 3 rebates. I believe you are following. Unless if they say determine the amount, so we're going to add 14,067 plus 7,002. So here they said state the number. So it's only 3 rebates: primary, secondary, and tertiary. I believe you're following. I believe you're following. So now I want us to go back to the question that we skipped there. Okay. I'm still looking for the question. Okay. Okay. Oh, is this? Oh, okay. So remember, guys, you need to first understand the steps of answering the question. Check what you are given. Remember, non-taxable items. It's pension fund, donations, and UIF. Medical aid tax, we actually reduce it. And when we are calculating after calculating the monthly tax, that's why you deduct that. But you must check whether it's for an annual or monthly. So it's very important to consider that. Okay. Okay, let's look on the last question. Okay, well, by the way, it was number 4. Okay, there is the question. It says show how the under 65 tax threshold for 2018 was calculated to be 75,000. Explain what does this mean? Right, remember we know that this tax threshold, it is the income level at which a person will start paying tax. Right, let's look at this. Remember, it should be a level where there is no tax that should be paid above that. So which means if we calculate, we take that income tax, it's 75,750. Let's look at the way it ranges, the bracket. Okay, it will be in the first bracket, which is between 0 and 189,880. So we are going to do this to say, okay, fine. Let's now calculate the 18% of that 75,750. Okay, and then now, okay, there it is. So we'll say the annual tax. Let's now calculate the annual tax. So the annual tax will be the 18% of 75,750. If we work it out, what is the 75,000, 18%? So this will be 13,000. 13,000. Okay, sorry. 13,635. Then from this, we need to subtract the rebates. We need to subtract the rebates. This person is under 65, already qualifies for the primary rebates. So what is the primary rebate? The primary rebate is 13,635. 13,685. What is the difference? The difference is 0. Right. So you see that there is no tax that is being paid at this threshold. So which means according to the target, they set this tax knowing that at this tax, at this threshold, there will be no tax that will be paid. So it means it was set based on the rebates, looking at the rebates, and also based on knowing that the 18% of 75,750 will give us the same amount as the tax threshold. That's why this was the tax threshold set at 75,750. Same applies with the one for 20, was it 2017? It was also set according to the given tax rebate. Unfortunately, like we cannot use this has to change. So which means, yeah, like this is how they're actually determining the tax threshold based on the rebates, so that there's no tax that will be paid at that tax threshold. Right. I strongly believe you are following. Yes, so all the time when you are determining when you are calculating the income tax, you need to first consider this. Number one, if you're given a monthly taxable income, you need to multiply that by 12 in order to get an annual taxable income. Then you compare it with the tax threshold. If the annual taxable income is bigger than the tax threshold, it means this person qualifies to pay tax. But if the annual taxable income is less than the tax threshold, then it means this person does not qualify to pay tax. Then again, you need to be able to know that the pension fund, the donation, the UIF, this falls under the non-taxable income. So it means this need to be subtracted from the gross income. But you must also, sometimes they can give you an annual non-taxable income. So it means if you want, when you are given monthly gross income, you just have to divide those amounts by 12 so that they must be in months, so that you can subtract them from the annual gross income to get the monthly, from the monthly gross income to get the monthly taxable income. And always, once they give you a monthly taxable income, you need to multiply that by 12. And again, after that, you have to identify the brackets in which that annual taxable income is falling. Then you start calculating the annual tax, where you take you look at the tax brackets, you work out the minimum. You use the minimum amount plus the percentage of the taxable income that is above the lowest value in the range of that bracket. Then after that, you subtract the rebates based on the age of the person. If the person's age, usually if it's less than 65 years, so it means that person qualifies for a primary rebate. But if it's 65 and older than 74, just between 65 and 74, the person qualifies for primary and secondary. But if it's bigger than 75, it means the person qualifies for primary, secondary, and tertiary. And from there, after calculating the annual tax, you divide it by 12 and you subtract your medical tax credits, and that will give you a monthly tax. Right, this is how you calculate the income tax. Yeah, I think you guys are following, and this is the end of the session. Kindly don't forget to like, subscribe, and hit the bell button for future video notification. Thank you very much. Take care. Goodbye.